Policymakers in Southeast Asia's biggest economies may begin to remove monetary stimulus in their financial systems as early as the second quarter of 2010 as growth resumes, according to UBG AG. Singapore may shift its currency stance to one that allows for a modest and gradual appreciation of its exchange rate, while Thailand, Indonesia and the Philippines may start raising interest rates in the quarter ending June, UBS economist Edward Theatre wrote in a report published yesterday. Malaysia will raise rates by 50 basis points next year, Credit Suisse predicts. Central banks across Asia have started to signal they may soon need to raise borrowing costs as stimulus spending worth more than $950 billion revitalizes economies and threatens to stoke consumer prices. Credit Suisse yesterday raised its growth forecast for some Asian nations, including Singapore and Thailand. Theatre wrote, discretionary monetary policy easing in Southeast Asia appears to be at an end. A removal of policy stimulus is possible because of an expected improvement in GDP growth, credit growth, and inflation. Because of the shocks each economy has received in the last 18 months, any removal of stimulus will be both cautious and tentative and likely to be halted if growth moderates. Singapore should return to a policy of allowing the currency to strengthen once the economy recovers from its deepest recession since independence in 1965, the International Monetary Fund said this week. UBS foresees a real possibility of a tightening move by the central bank at its April review amid rising inflation expectations and credit growth, after earlier predicting no such move next year. Goldman Sachs Group Incorporated yesterday said Singapore will allow for more room of a stronger currency in 2010. Bank Negara Malaysia will be the only one of the region's 5 biggest economies to leave its monetary policy unchanged next year, UBS Theatre predicts. Morgan Stanley and Credit Suisse economists are more bullish, with the latter expecting rates to be raised to 2.5% by the end of 2010 from 2% now.